What's going on, guys? My name is Arjun and welcome back to my channel. Today, I want to start a new series of videos. I wanted to start a series of videos where I give you guys some recommendations of stocks that I would put into a beginning portfolio. I'm looking at these stocks to be the core positions in your portfolio. Please remember that none of this is financial advice, and this is just my opinion and my recommendation of some stocks that I think will perform very well over the next 5 to 10 years. What are the things we're looking for in the stocks to go in our beginner portfolio? First, remember, we're looking for companies that will outperform over the next 5 to 10 years. The first thing they should have is a track record of strong overall growth and the future potential for more overall growth. Second, they should be profitable, or at the very least be on a path to profitability very soon. Profitability is the most important thing for a company in the long run. The third thing is that they should be in an industry that's evolving and growing. You don't want to buy a company that's in a dying industry. The fourth thing we're looking for is what Warren Buffett calls a moat, or a sustainable competitive advantage within their industry. So one way to look at this is, are they a game-changing company? Finally, and one of the most important things, we need to find companies that have strong leadership and leaders who have a good track record for building and growing good companies. So once we've found these companies, here are some things we should look at doing with them. Look to add to these positions consistently over time. We should be continuing to build on these positions and turn them into a core part of our portfolio. You want to be prepared with cash for stock market declines to pounce on these stocks when they come on sale. So that means either having cash that you're ready to invest and waiting for the sale to pounce on the stock, or taking some money out as profits and reinvesting that at a later date so that you have cash ready for the time when the stock comes on sale. Next, remember that our time horizon for these investments is 5 to 10 years. We're looking for these stocks to grow over the long term. Remember that these stocks are fast-growing companies and that there will be a lot of ups and downs. So please have patience with your investment. Patience is an important virtue in investing. So without further ado, the first stock I want to talk about is the Trade Desk, ticker symbol TTD. They operate a programmatic ad buying platform. So what that basically means is that they gather data and constantly adapt the ad campaign for the ad buyer to make that process more efficient. Let's say you are selling shoes and you want your ad for shoes to be in front of people who are actively looking for shoes. So TTD takes their data and uses their platform to put the ad in front of the people who are looking to buy shoes. So what TTD is doing is acting as the middleman between the advertiser and the advertising platform and connecting the two. They are one of the leaders in this programmatic advertising space. This space is growing 20% a year and currently accounts for less than 10% of the overall advertising space. They work with a lot of buy-side advertisers, and they have strong partnerships, including Nielsen, TikTok, and many more of the largest advertisers. And a very important thing to note here is that they have a strong retention rate, almost 95%, which means that 95% of the people who spend money on the Trade Desk are staying there. And in a lot of cases, they're spending more money. So now let's talk about profitability and growth. Unlike many of the newer, fast-growing companies, they are profitable, and they have been profitable since 2018. And between 2019 and 2020, they nearly doubled their profitability. They are extremely focused on connected TV and audio, and that is one of the fastest growing advertising spaces right now. They're also focused on partnerships outside of the US. So they're looking at markets like China for even further growth. So for example, they had their partnership that they established with TikTok to work in the Asia Pacific market. So while we know that Facebook, Google, Amazon are some of the largest platforms that people use for advertising spend, there are a lot of advertisers that are looking to place ads on other platforms. And TTD is a great place for those advertisers to look. So one of our criteria was looking at whether or not they have a moat or a sustainable competitive advantage. They've spent years building and growing their platform, and this requires years worth of data to properly train that platform. So for somebody else to come in and try to take market share away from TTD will require a lot of work and time to get their platform to the level that TTD's is at. And they've carved out a nice niche on the buy side of advertising that'll help them to continue their growth. Now let's talk about the leadership. Their founder and CEO, Jeff Green, is a serial entrepreneur. He previously founded a buy-side ad platform, AdECN, and sold that to Microsoft. What's important to note here is that one of the most important lessons for early stage investing, if an entrepreneur has led a successful company to a successful exit in the same space, you write a blank check. So that means, in the case of Jeff Green, he has successfully led a buy-side advertising platform to a successful exit, meaning selling to Microsoft. And then he went and founded another company in the same space. So investors should be lining up to invest in his next company, The Trade Desk. Another thing that I really like about Jeff Green is that he maintains a large percentage of ownership in The Trade Desk. He still owns about 15%. So it's in his best interest for the company to do well and for the stock to perform well. So now, the most important thing is how well has the stock performed since it's come IPO. Since its IPO at around $28 per share, it is currently trading around $750 per share. That's close to a 30x increase in just over 4 years worth of its trading. TTD is currently trading 30% off of its all-time high. And this is in large part because of the recent tech sell-off where some of the higher PE and higher multiple stocks have been taken down further. Still, its 1-year return is close to 300%. I believe that this sell-off is actually just a really good opportunity to get in at a better price for TTD. Of course, as with any other investment, there are risks specific to that company. One of the biggest risks that people are concerned about is around privacy concerns and their access to data. So recently, Google made some changes to their ad tracking policy, which in turn sent the Trade Desk down. But Jeff Green, the CEO, quickly made a blog post in response and discussed how this really wasn't a big deal to them at all. Basically, he said, not much has changed, but what has changed will ultimately prove positive. So it seems that this is something that the Trade Desk has been anticipating and has been ready for to make changes to their platform. He also made it a point to talk about connected TV and how that was not affected by any of these changes, and how he finds the most promise for the future in connected TV. So now let's go over TTD and see if they check all the boxes. First, strong overall growth. Like I mentioned, they had triple-digit growth in connected TV, which they believe will be the fastest and biggest growing space in advertising going forward. And overall for 2020, they had 34% growth, which for a company of their size is tremendous. The second thing is profitability, or a path to profitability. They have been profitable since 2018, and they nearly doubled profitability during their last year. So despite the pandemic that was ongoing, they found a way to keep their costs down and double their profitability, which is the most important thing for a company. The third thing is that they're in an industry that's evolving and growing. More advertisers are looking for alternatives to Facebook, Google, and Amazon, which are the big three of the advertising platforms. And they're turning to TTD for that because programmatic ad buying offers a better way for them to spend their ad dollars. The fourth box is a moat in their industry. Their main competitive advantage is the years of data that they have and partnerships that they've built. And they're offering a way for companies to save money on ad spend, which people love. Finally, do they have strong leadership? They have a veteran from this industry. They have somebody who has successfully led a company to a successful exit in the exact same industry. So I would say that their leadership is top-notch. and one of the best in the industry. So I know that TTD at $750 may be a lot of money for people to spend all at once, but nowadays, with many platforms offering partial share buying, it's a great way for you to be able to buy good companies regardless of what their price is. Remember that this is just my opinion and my recommendation. My hope for this series is that you'll be able to find a few stocks that you like out of the recommendations that I give, and you'll be able to begin building a portfolio that you can continue adding to and use as a core part of your portfolio to hold for the long term. Thank you guys for watching this video, and if you enjoyed it and want to learn more about business and investing, comment, like, subscribe to my channel, and let's head on over to the next video.